What's cryptic about crypto? This is the IssuesWatch podcast. Hello and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. This episode qualifies for nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or CLA. Okay, crypto. How many times are you going to hear about this? I've done probably 3 or 4 episodes on crypto. Frank and I have talked about it in CPE sessions. We talked about it here. It's important because you hear so much stuff about it, and usually, why do I come up with some of these episodes and some of the topics? Is because I usually see something when I'm reviewing papers or talking with somebody around the office and they make a comment, and I'm like, sounds like we need a little bit more information on this. So crypto. Is it just crypto? Nope. So AICPA, when I read some of their information, they refer to it as digital assets. FASB refers to it as crypto. What's the difference? I'm not sure about the difference between the two. I mean, if you think about a digital asset, sounds like it could be more encompassing. Whereas cryptocurrency sounds like it focuses very much on a currency mindset. I guess anything can be currency if you look at bartering, but put that aside for a second. Cryptocurrency sounds very much like a currency mindset versus digital asset sounds like it could be more encompassing. But what's interesting is the AICPA put out a really good article on digital assets, and I'll talk about what was in that article in a little bit. But first, let's talk about the initial accounting aspects. Let's recap for a second. If you remember, the initial accounting for cryptocurrency was that it was treated as an intangible asset and reviewed for impairment annually or every reporting period. Okay? And here's where the problem kicks in, is if you remember goodwill, other long-lived assets, fixed assets, when you had to review them for impairment, what would happen? You have something on the books for $1 million, you look at it, the fair value, I don't care how you determine the fair value, if it's based on cash flow, whatever it is, comps, the fair value says it's worth $200,000. You now have to write that asset down to $200,000. If in the next reporting period, it's now worth $1.4 million, you don't get to write it back up to the 1.4, and you don't even get to write it back up to the $1 million where it was originally. It is now down at $200,000. That's the way the impairment concept works. And if you remember during COVID, there was a lot of companies that potentially had impairment issues because of COVID, and I was surprised that the FASB didn't come out and say, hey, listen, we're going to kind of take a little bit of a break on this issue, because you had some companies, especially real estate, that did take a little bit of a hit during that time. Anyway, that was the initial accounting, all right? Now, before we get to the current accounting, let's talk about the digital asset comment that I was saying before. The AICPA put out a really good article. You can Google AICPA digital assets taxonomy, and it's a fairly long article, much longer than than I'm going to talk about here, and it really gives you a good flavor and an understanding of some of the concepts of digital assets, especially for old people like me that think, oh, everything Bitcoin is the only thing that's out there. For starters, it lists the 3 different types of digital assets. The first one falls under the central bank digital currency. And they say that that's the most controversial. Some countries actually create some of this stuff. So they, as I said, that's the most controversial. The next one is fungible crypto assets. Fungible, not fungi, fungible crypto assets. You'll understand a little bit why I keep saying that. Just remember fungible. In fungible crypto assets, each unit of a fungible crypto asset has equal value to all other units of the same denomination. Example they give is Bitcoin. Now there's others out there, but that's the example that they give. Then there's non-fungible tokens, NFTs. NFT's use of cryptography to generate a unique ID or token representing a physical or digital object that is linked to the owner's wallet address using a blockchain transaction. NFTs are like digital fingerprints that prove ownership of a digital or physical item. Okay. Those are the three that just starts the article. If you get a copy of it, it really goes much deeper. If you need a copy, you can't find it, email me. I'll be happy to send you a copy of it. Then in December of 2023, the FASB issued ASU 2023-08 on crypto assets. Now, you've heard Frank and I probably talk about this, but I want to just go over it again. Why? Because I've reviewed a set of financial statements last night, and they had a real nice write-up about accounting treatment. The problem is they didn't address the new guidance that came out. Now, it's not effective till fiscal years or years beginning after December 15, 2024. So theoretically, it's not effective yet, but you can early adopt. Why do I recommend you early adopt? Well, put aside some of the issues that you're going to have to address. It fixes some of the issues of the initial accounting. You'll hear about it in a second. But in order for you to be able to use the new treatment, it must meet the following criteria. Meet the definition of an intangible asset. That's the first one. It does not provide the asset holder with an enforceable right or claims on underlying goods, services, or other assets. It has to be created or reside on the distributed ledger based on blockchain. It's not created or issued by the reporting entity. And the last one I want to reference is that it is fungible. So remember, I kept going over before, kept saying that word for trying to get your attention. It has to be fungible. And again, what is a fungible crypto asset? Each unit of fungible crypto asset has equal value to all other units of the same denomination. Okay, so it has to be fungible. Some of the changes. It requires the entity to present the crypto asset measured at fair value separate from other intangible assets on the balance sheet. Okay, so you can't just put it with goodwill or customer relations or customer lists or trademarks. It has to be broken out separately. The changes from a remeasurement, remember, because now you can remeasure it each period. Changes from a remeasurement of crypto assets are shown separately from changes of other carrying amounts of other intangibles on the income statement or the statement of activities for nonprofits. So you're now going to measure at fair value at every reporting period, and the change has to be broken out separately on the income statement, and the intangible itself has to, the crypto asset has to be broken out separately on the balance sheet. Of course, there are significant disclosures, a lot for me to go over today. So the good thing is that they came out with some guidance that allows you to treat this like it probably should have been treated a while ago, especially with the way that it fluctuates up and down. The difficult thing about it is that there's going to be a lot of disclosure as it relates to this. Because it goes up and down so much, they're going to expect you to be explaining how you've determined the value, okay, and the type of crypto asset that it's focusing on. So look into it. If you have this, if you have clients that are thinking about this, if you work for a company that does it, look into this. One of the reasons why I do bring this up a lot is because nonprofits, there's a good chance that nonprofits are going to get these as contributions. I hope nonprofits are using any of their endowment and putting it into this, especially with the volatility of it, but that's my editorial comment. The guidance does address for something as it relates to nonprofits, particularly if nonprofit gets, they get cars, they get other donations, they turn these right over into cash nearly immediately. If it's converted to cash nearly immediately, it shall be classified as operating activity on the statement of cash flows. Okay, fairly straightforward. Why do I keep talking about nonprofits? Because there was a 2023 report, a giving report, and in there they said that the Fidelity Charity, the charitable donor fund that has it, they've received $38 million in crypto assets in 2022. So that's 2 years ago. There's a lot of activity that's gone on with this. I haven't seen any recent numbers, but at least in 2022 there's $38 million. Now, that might not sound like a lot when you have the whole United States, But the point is that it is starting to happen, and you don't want to find out about this, that somebody in your office got it and they didn't know what to do with it and they just put it on the balance sheet somewhere, or you're doing the audit and you find out that the client received this and didn't do anything with it and didn't treat it properly. They also talk about, now this isn't just relates to nonprofits, there's another article that came out recently that said that how to process crypto or digital assets. Of course, the first one, 3 choices. First one is to outsource to a third party. You can manage it in-house. Now, the problem with managing anything, especially something like this in-house, is that A, a lot of people don't understand it, so you have to have a good system of internal control to follow and process something like this. And then, of course, you can use donor-advised funds, and that's particularly related to nonprofits. So why do we start focusing on this is because, you know, a lot of things have changed. I mean, when I started accounting, everything was on paper. So everything's digital now that we're working with. We're moving more towards, you know, audit data analytics. We're using more AI in the audit process too. So you know that companies are going to start moving to not just something like crypto assets, but the whole blockchain environment. And I've talked to people at larger firms, and they're starting to get involved in some of the blockchain, either auditing through it, around it, with it. So you've got to start thinking about this, focusing on it. Now, if you want more information about the blockchain, there's a recent podcast with one of our members, Sean Steinsmith, great guy, really, really smart on this topic, with Jeremy Now, where they did talk about the whole blockchain, you know, not the whole blockchain, but some blockchain aspects. And I recommend you look into that, because it's time that we start getting a little bit more up on this stuff. So, in closing, I want to tell you about a cool upcoming event. The Society's annual Accounting and Auditing Conference is on October 23rd. Now, in addition to being able to attend virtually, there's also an option to come to the Society's offices in Roseland for a watch party. The presenters, including Frank and I, will be presenting virtually, but you'll be able to participate in real-time discussions with other attendees and attend a special post-conferencing networking reception. Visit njcpa.org/conferences for more information and to register. I think it's a great idea because it gives people the ability to interact and talk about the topics. And listen, Frank and I are going to probably be here, so we'll hear if people have questions, and we'll, you know, try and interact directly, at least this way, through it. But I think this is going to be a great system that they're going to try. Now, of course, be sure to join the Society's Accounting Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. And thank you for watching or listening.